I think the Magnificent Seven has had its day, but I don't think that means that there's a general problem in the market. I think there are bubbles. I think there are several very, very big bubbles, but I don't think there is an overall bubble. In fact, the term we use in the office is there's a bubble and an anti-bubble.
Very pleased on this particular podcast to welcome George Cooper, who's Chief Investment Officer at Equitile. That's Equitile Investments Limited. Let's turn our attention, if we may, George, right at the beginning to the United States. Do you still think the success of the equities market there is being driven and will continue to be driven by the so-called big Magnificent Seven?
In a word, no, I don't. No, I think the Magnificent Seven has had its day, but I don't think that means that there's a general problem in the market. I think that there is a pocket of overvaluation in the US market, but there's also a swathe of undervaluation. So I'm still optimistic overall, but I think what we're going to see next year is a continuation of a rotation out of essentially the tech, the AI space, into a lot of other companies that are really doing very well and are now trading on extremely low valuations. So I think there's a lot of room for optimism still, but I don't think it's going to be led by the Mag 7.
Would you care to point to any of those companies? I'm thinking about investors who may well be interested in looking at these lower valuations.
Well, I think there's still some of the consumer staples sectors that are very undervalued, but I have to say my favorite sectors are still the two that I mentioned last time, which is still the banking sector. I still like the banking sector, though I actually prefer the European banking sector to the US banking sector. But the one that we still love the most is the gold mining sector and the precious metals. I think we're still in the foothills of what we call the debasement trade, and I think that's just going to get stronger next year, and that's going to lead to more and more buying of precious metals.
I noticed when you walked into the room that there was a spring in your heel, which I thoroughly enjoyed, which strikes me that Equitile has not had a shabby year. Can you tell us how well you've done and why?
We've had a phenomenal year this year. Yes, so the dollar share class of our global equity fund is up a little under 45% year to date. And we also run a macro strategy, and that's up just under 100% year to date.
Wow.
So we've had a phenomenal year, and it has been largely due to the banks and the gold miners. We've been playing the dollar debasement trade.
You further down the list of things to talk to George about, you mentioned the US going through a sort of McCarthy era.
Yeah.
So this is exactly what George is talking about, isn't it, really?
Yeah, I think so.
Do you see it like that?
Yes. I mean, a big part of the debasement trade is, to be blunt, you've made, or not you, but policymakers have made the US dollar much less attractive to the traditional holders of US dollar reserves. The global south, for want of a better word, China's and others. And a part of that is, I think, a big own goal that the West has made is this expropriation or confiscation of the Russian reserves. As painful as it may be to hear it, that does a lot of damage to the status of the
Can you elaborate on that a bit, George? Because I think it's a very key point.
Well, if you put yourself in the position of any other country, a country that is not really in the inner circle of US policy, if you like. So China, Africa, most of the Asian countries. If you put yourself in their position, if there's any way you can visualize having a future conflict with the West or with the US, you have to figure, well, my reserves are not safe anymore in treasuries and Western assets. And they've responded to this. They've stopped accumulating treasuries, and they're now accumulating gold. So I think it's a strategic own goal. We get a tactical win from it.
But we could see a credit crisis as a result of it. That's maybe too
Yeah,
strong.
I wouldn't say it's coming as a credit crisis, but yeah, you're seeing a loss of dominance of the dollar as a global reserve asset, and that it's still an important currency. But I think over years to come, we're going to rue this decision.
Kevin Hassett looks like he's the favourite to take over in the new year. There are other candidates. But we can't really have a puppet of Trump as the new chairman of the Federal. He's got to understand the basic problem with trade, economics, and inflation, and can't just cut rates because Trump says so.
We can't, or we shouldn't. We shouldn't have a puppet. But I think in practice, we are seeing, I think, the start of the end of true central bank independence. As in, I think the central banks around the world are being brought back under, let's say, government influence. Then they're not being directly controlled.
Right.
Even the Fed, with this new appointee, is not going to be completely controlled. But Trump has made it very clear that he wants a dovish central bank. He wants lower rates. I think you've got to remember what a central bank's for. We're told that the central bank's there to control inflation. But if you've studied the history of central banks, as I have, over many years, the central banks were set up to ensure their governments are solvent. That's what they're for. They're to make sure the governments can pay their own bills. And at the moment, the interest service costs on government debt, and the US is a good example, but it's not the only example. It's the same for the UK, same for European governments. The interest service costs are now so high that they frankly need to cut rates just to keep their own governments solvent. I suspect next year will be, in a way it's happened this year, but next year I suspect the best returns will be outside of the US, which has been the leaders. I think it'll be Asia. Surprisingly, I think there'll be pockets of excellent returns in Europe as well, still. But Asia, Japan, Latin America as well. I think there's some optimism there, and of course, some of those regions have got better demographics, which will help as well.
I'm just amazed that people don't see more in healthcare. Is that something that interests you?
Yes, we've been surprised at how unloved that sector is.
Some of the big names, extraordinary. Pfizer, have done really badly, relatively speaking. Eli Lilly was the only one because of the Ozempic, but others have been terribly disappointing. Merck, hopeless. I don't mean that disparagingly, but relatively speaking, it's been not a sector to be in.
Yes, and even Novo Nordisk, which is leading in the weight loss drugs as well, even that's had a terrible performance. Yes, I'm not going to say it's next year's story or even imminent, but the longer term demographic tailwinds for the healthcare sector, I think, are going to get stronger and stronger and help that sector, because generally as a population gets richer, it tends to spend a bigger proportion of its income on staying healthy and living longer. So, and fortunately, populations are getting richer. And of course, also as the population gets older, they tend to spend more. I think there are bubbles. I think there are several very, very big bubbles. But I don't think there is an overall bubble. In fact, the term we use in the office is there's a bubble and an anti-bubble. I think what's happened is there's been a migration of capital from one half of the economy, if you like, into the other half. So it's left a shortage of investment in some areas and an excess of investment in the other area. The overall level, I don't think is a bubble, but there are big portions of the market that is in a bubble, with just simply ludicrous valuations and some frankly ludicrous business models.
So what you're saying is investors have to use their loaf, for want of a better expression.
I think the investors have to use their loaf. I think I think a simple strategy of just buying the index is very dangerous here, because there's such a big weight of the index that is in this bubble situation. So I think there's actually, I look at the future, the next few years, actually as being a target-rich environment, I think, for investors. But you've also got to avoid these bubble areas.